The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
18th day of November, and my pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time, of course. If you're listening now, you know this is exactly the time that I come on. And Steve Rhodes kicks us off Monday through Thursday for 2 hours. And let's see, today, Monday, of course, you got Larry Pesavento, you got Daryl Martin, you got Dave White, you got Tom O'Brien, 4 to 6, wrapping it up. And on Fridays, of course, we have a slightly changed opening 2 hours. We have Steve in the first hour. Then you get Tom and Daryl for the next hour. So, and you get Nico DeHaan coming in at noon, Living a Primal Lifestyle. So we have programs just running all the way through. 9 o'clock in the morning till 6 live, and it gets archived, so it's just right there anytime you want to get it. Dow is up 58 points. All-time highs in the 16,000s. In the 16,000s. The S&P is up 2.91 at 18.01 lagging, so the Dow is up 0.36%. The S&P so far is only up 0.17, so the 500 stocks are having a little bit of a tougher time. Mixed market there. Let me just show you. This is the E-minis right here. E-minis are going into the head of a leg E, which will be a peak E of 1797.50 is not taken out. 1799, that should be, sorry, 1799. Let me just type that in. 17, it was a mistake, 17, I must have done that even earlier. Okay, 1799.50. Right now, the S&P E-minis are at 1798.25, trying to tackle that inverted candle right there into the wick. And the stochastic's okay at 71% in the 120-minute chart. MACD's just about to turn up or be deflected lower. And so far, there does seem to be strength. Some seem to be buying right here. What's important is that in the daily, you've got this rising wedge formation going into the sell zone, and it's sneaking very quietly up above it at 1801 to 1803. It breaks out, there's no question about that. Now let's just do a couple of other things here. As I'm doing it, I will just show you the charts that I am looking at, and this is the beginning of the week. We're always going to do this now. Well, I usually try to do it, but we're going to do it right here at the opening of the week, first 2 hours of trading. The Dow. The Dow is in leg F/B. There are signs that say that the power puts it more in the category of a possible B going to a C and a D, but I don't really have anything to say because the day is not finished. I really got to wait until 4 o'clock. Anything can happen. It could spike right up into the 16,030 or 50s by the end of the day, or it could reverse right now and then close down a negative, and that'll be very important. Well, the stochastic's at 97%. That would take a long time to get it to under 80%. It would have to drop decisively underneath the 15,832 9-period exponential moving average support to get it to about 86%, 85%. Then it'd have to drop to under 15,760 to really break under 80%. So what I've said to subscribers is that yes, there are the reasons for me to be a little bit cautious right here. My opening call, we've had some fabulous profits in some of our longs. Really want to protect those, but at the same time, the pattern to the match of August the 2nd, where the high was repelled at the that inside track dash line, and then again when it is on the 17th of September. This time we've gone right through it decisively. Says that you've got to anticipate that even if there's a pullback, I'm anticipating a pullback here would be probably be in the 3 to 5, maybe 7-day range, maybe 2 weeks if it does that. But unless the volatility index, which is trading at 1262, is up 43 cents, it's up 3.53%, because the S&P is kind of weak. But I'm watching this. It really, the volatility index is not based on the indexes that I'm watching most closely, the Dow and the S&P, but it has a tremendous influence with those two particular indexes. Now, the other thing, that unless there is bad news, and I don't see a sign yet of bad news, I do see a sign of potential bad news. But that's not bad news. Potential bad news is just potential bad news. So to sustain a down move, in other words, to get a sell signal is easy. I can get that at the end of the day on the Dow. All that's saying is that I've got a short-term sell signal, but to be upgraded to a sell mode would take a lot. I need the stochastic to plunge. I need the MACD to cross negative. I need a whole bunch of things to happen before, in my work, I can say that I've got a sell mode. Ironically enough, sometimes you can get a sell mode, and the day that you get the sell mode confirmation, or the next day, you could actually get a turnaround. All it's doing is describing something. It's not, the sell signal is your best signal, because that's the one that can get upgraded, and if you are quick enough to get in at the right time, it means that with a very tight stop, your risk to reward, and that's all we're talking about, has a greater chance of success. That's all we're looking at. So let's look at the numbers here in terms of the S&P. So let me give you the numbers. A breakout occurs. It's kind of occurring right now to a certain extent. The weekly chart has, and I showed my subscribers, a really interesting set of parameters on the weekly and the monthly. But in the meantime, let's just say that in the 16th, right there, in the 16,200 to 300 area, there is tremendous resistance. That's on the weekly chart. Daily chart, I think we're getting very close there, especially based on the 120-minute chart. In leg E, just above resistance right now, but it's getting a little bit toppy, and that's all I can say. So those are the parameters that I'd be looking for on the upside for the Dow. The downside, shorter term, has 15,930s, and then you go right into that 15,800, the 9-period exponential moving average. And I'm only just close to getting a sign that there could be a turnaround here. That's irrespective of other dynamics that I was looking at for my opening call. Now, the S&P, SPX.X. The S&P is also alternate wave count F/E. Stochastics at 96%. Yeah, 96% is really good, very, very strong. It's the equivalent of being weak and being at 5 or 4% on the downside. So this is leg E in the weekly chart of the S&P, and we're getting close to a very strong resistance area. And that resistance area starts at about 1814 and higher, but in the meantime it's at 1800, and the daily says it's getting a little toppy here, that it might have to test the 1796, 1793 area if there is some weakness coming in. F/C is the daily count in the Chapman wave methodology. Let's look at the Qs. The QQQ series, little doji form here, very weak considering what the others are doing, certainly what the Dow is doing. And at 83.92, the stochastics at 93%, that's good, but the MACD hasn't yet crossed. It's just trying to cross positive now after pulling back. The weekly chart broke out. Now the weekly chart, I'm going to be calling this a leg F. It should be F/P, but right now I don't need to do anything about that. The stochastics at 93%, MACD is good, weekly is very strong, monthly is very strong, and the monthly says that 85s, it's at 83.90, up in the 85 to 86 area on the monthly is very, very strong resistance. Now what I'm actually looking at here is that I'm anticipating that we do get some kind of a pullback. We get a pullback at some point today, tomorrow, the next day. And as I say, it's a 3 to 5 session pullback. At first I call it a digestive pullback. Depending on how the volatility index acts or reacts is going to be really important. Why? Because if there is strength in the volatility index, I'll be watching it closely to monitor it to see exactly where, how it holds on any bounce in the market as it starts to come down. Because if it's starting to come down and the volatility index becomes very sympathetic to any rally, they're saying, uh-oh, it's not yet ready to start moving up into the 16s or 17s. Right. So that's the Qs. Qs have 83.28 to 82.90 as support. I'd say 84.10 is really somewhat of a breakout on the daily, and it starts to raise the base considerably. Now let's go to gold. I'm going to go to the GCZ just for the moment because that's the one that I've done the most notation with. Repelled at the 9-period moving average, down 7. Gold is actually acting right now. It is down 770 at 1279. And silver's down 16 cents at 20.56. Now this is going to be very interesting. Why? Because the dollar is showing some strength. It has shown a lot of strength, and then it's shown a lot of weakness, just that intraday type weakness. Gold hasn't yet broken down, but it's been repelled by the 9-period moving average. The GLD shows that quite clearly. I've been drawing in this pattern for so long. I'm just going to add this one here. And I don't know if it's going to work, but so far it seems to be the pattern du jour, the one that you really have to think of as a template. That's in the Chapman wave methodology. The H pattern that I talk about in my CD introducing the Chapman wave method. Hey, folks, I think, in fact, I saw that they haven't quite taken down. They haven't taken down the Tiger dollars. I think there's still a moment that you can grab those Tiger dollars. It's very important if you want to be able to save a lot of money, 25%. So my CD introducing the Chapman wave methodology, there you're looking at chapter 17 slide. I think it's from about slide 332. You'll see that H pattern. And we've seen that many times here. It can be an inverted V, but it's the same principle involved. And what we're looking at here is the daily is pulled back almost completely to the 121.85 level. It went to the upper did. It went to 121.73 below it. And now you're looking at this H pattern that goes to an M pattern unfolding in the weekly chart. Now, what I'm looking at also is that when you're looking at the TLT, and this is going to be important to me, the TLT, which is the Lehman 20-year T-bond fund, is trading right now at 105.15. It's moving up. It's almost in leg. It is 115.12, 115.15. It's in leg B in the daily. Now, I was thinking about maybe getting a position in the TLT. At the 105, I just think the money can be better put to use if you identify it correctly. That there's going to be a bit of a rally here, another HTM pattern, this time in the TLT. I'm going to be watching that really closely. Now, I just wanted to do one little thing here. The currency pairs, the EUR USD, a nice little bit of a leg A up in a counter trend rally in the euro. There's a strong resistance at 135.21. There's strong resistance at 1.35468. That was the high of the 5th of November. Most importantly, look at the dollar. Remember, I keep saying I don't see strength in the dollar. I think that the administration wants to keep the dollar low so that even though it is rallying, it doesn't get what it's due because it's being, boom, this is whack-a-mole. Boom, 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 it hits on the head. So the dollar's pulling back. If the dollar pulls back under 80 in the next few days, that's not going to be a good sign for the dollar. I'll be back with Dan in North Reading straight after this break. Dow's up 54, S&P's up 2.5. You're right back at 877-927-6648.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's up 50, S&P's up 2.5, and we're going straight to North Reading, Massachusetts, to Dan. Hi Dan, how are you?
Good, how you doing?
I'm going to have to tell my engineer that it's not R-E-D-D-I-N-G. It's like reading, R-E-A-D, right?
That's correct. Pronounced like
okay.
Yeah, I had called you last week or 2 weeks ago about this one, and you had given me some good advice on when to go long, although I did not go long. So now I'm wondering if it's still a long option or if you think I should wait.
You know, this is a very interesting stock. Well, let me see what the name is. I love it. I always do the work, and I always forget to either look at the price. I just look through the chart patterns. Oh, I'm going to do this right. You're live on air. I'm looking, folks. This is the monthly chart. Usually on the left, I have the daily. In the middle, I have the weekly. And on the right, I have the monthly. And this is Banco Francis. Oh, I remember. ADS. The symbol is BFR. It's trading at 7.53, down 32 cents. That's down 4%. So when you have a low-price stock, remember, you cannot be afraid of the moves. You've got to handle the moves because the percentages are always very great. So some people, I know that I fluctuate. Sometimes I'll be looking at a percentage, and sometimes I'm looking at the price. In a case like this, I'd probably talk in prices of 20 to 30%, 20 to 30 cent moves, as is kind of what I'd be looking at. So, folks, what we're looking at here. From the low bar, let me just pull this all the way back so that you can see it. Oh, look at that. I can do it again and again. I'm just going to do this because this is educational here at TFNN. What we're looking at is from the low bar in the monthly chart of a little doji low on the June of 2002, 1.20. It makes, now remember the Chapman wave methodology is to identify each successively higher peak. On the way up you use capital letters, uppercase, just to very visually, quickly identify that it's in an up move, and on the downside I use lowercase just to quickly say, hey, that's in a down move. So it's got A, B, C, D, E, and then it goes to an F. So the Chapman wave methodology is to get you to a D, but it can go higher. It can go to E and have a bit of a break and then suddenly go to F. You remember the song goes that it can get you to D and suddenly goes to E and F? Well, look what happened here. And I'm just busy notating, and there's no hocus pocus or anything. This is just plain old counting the peaks, as simple as that. D, E, and once again, I love it when stocks have a certain rhythm to them, a certain characteristic that says, please keep in mind that I do a particular thing, and I do it not once, but I can do it twice, 3 times, or maybe even more. And what this has done, from that low bar back in June of 2002, it went to peak A, B, C, D, E at 735 in June of 2003. A year later, pulls back quite sharply, holds the 9-period moving average, and there's a pattern that I call the right arm extension. Now, the right arm extension, that's in Chapter 18 in my CD, Introducing the Chapman Wave Methodology. I just want to show it quickly for those of you, a lot of you have now got the book, and you're starting to read it, the CD book. That's where the technicals, one of the technicals invariably allows the price to go up, and the other one fails before much sooner. And that is almost like the pattern that I call the drop bucket or the double top formation, except in this case it can go a lot higher. And that's what it does. It goes from E all the way to F in January of 2004 at $10.15, opening at around number 9, and then closes lower, and then it goes all the way down, starts a brand new buy mode in June, another June low. So I got to keep that in mind. June of 2004 from 471, it goes A, B, C, D. It goes to an E, pulls back, and then has that right arm extension again. Stochastic goes over 80% and quickly goes under 80%. That's the heads up to say, watch out. You get this long-legged doji, which says no matter how much you pull back, within a 1 bar or 2 bar, you'll come back and touch at least the body of the candle. That's exactly what it does. So in March of 2007, from $13.54, it plunges in trough A, B, C, trough D. It goes down to a low of, in October of 2008, to a low of, what was that, 1 point something? Yeah, 1.51. Then it has another peak, A, B, C, D, pulls back and has a right arm extension to the 200-period moving average, and that's the clue. The 200-period moving average, would at the time was at 13.13. Instead, in November of 2010, BFR goes to $13.85. It turns around and comes back in a trough A, B, C, D again. D to the downside. Then it goes peak A, B. Now it's in leg C, and this might be a peak C if there's no new high above 937. Now we want to take a look at the 200-period moving average, the MACD, the stochastic, and the chart formation to say, will it do exactly the same thing again? And I'll be right back with Dan in North Reading. We're looking at BBVA, Banco Frances, ADS, trading at $7.54, down 31 cents. We'll be right back. Dow's up 54.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're with Dan in North Reading. We're looking at BFR, trading at $7.55. Let me just see, because it's held that for so long. How much volume? There's not very much. This is a very light volume stock. So this is what I, in a case like this is what I call a personal stock, meaning that if you're not an institution, you're not a heavy hitter, you're just a regular marketer. So you're looking at the stock market and you're saying, you know what, I'm prepared to hold this because it's got a longer term potential. I'm not interested in volume. It can go wiggly up and down, but I like the chart action. And as long as I'm looking at it with a longer term perspective, I personally don't have to look at volume. That's number one. Number two is a stock with low volume often can get hit on any news a little bit more seriously. Why? Because as the volume comes in, it tends to accelerate in that direction. So with that said, I'm going to make the suggestion that says, hold off. If today, it's funny how one bar, I'm a chartist, so it's like looking at I've always talked about this. I used to use the term X-ray, but you've got X-rays are for one thing, MRIs are for another, and sonic, if you use for the diagnosis process for the softer tissues like the stomach area and all, they would use sonar. So in each case, you've got to have the right instrument if you're looking at the right toolbox. And my suggestion is, 1 penny would have made the difference. If it made a new high today, instead of $7.98, it went to $7.99, pull back, and that would extend leg B, and then close today instead of at 755, it closes today at about 778 to 782. I'd say that's okay. But actually, I'm a little concerned about this particular bar, and I'll tell you why. If you look at the 120-minute chart, there was a left side, right side price time match, which had allowed it to go right to today to 11:30 this morning, so there's still time. No, there's no time at all. 11:30, it's just gone by. That was the bar, and it allowed it to get to the same area that it went to, the 798, but possibly 802, to try to get into the candle of 811 that was made on the 28th of October, and it didn't do that. So I'm going to recommend, if you had got in at the lower price, you'd be close to where you'd be stopped out for no loss. If you bought it now and it closed underneath the 9-period moving average of 730, let's call it 735, that'll be that H pattern that goes to an M pattern, not very positive. So I'm going to say it's lost its momentum. The day's young, 2 hours in, but I think it's losing its momentum. I'm a little concerned about it in the daily because of that peak E, and the cup formation should have today should have been a strong day. Yeah, Friday was great. Today should have been not as good, but at least up in the 805, 806 area. Day's young, but I don't think it's going to work. My concern is I can't really get a wave count that I'm satisfied because of the deepness of the pullback. From the pullback of at 937 on the week of the 18th of October, it really pulled back right to the 9-period moving average, and it's even gone underneath it. I'm going to say hold off. This is a case where I think you've got time, because the monthly chart says over a period of 2 to 3 months, there's just a really good chance that if it doesn't close below 590, that's a weekly close, but instead can hold 670s or somewhere around there, or even better, doesn't break 7, it could work its way back up and break the 937 high that made leg C, which is probably going to be a peak C if November doesn't show strength in the next week and a half. So I'm going to recommend hold off for now. Let's give it a few days, probably about Thursday or so. I'd like to look at it again. This is one of those, I don't mind missing a move to the upside. Why? Because it's showing me it's got the strength to try to tackle that 200-period moving average in the daily, and also to try to get back to the double hit 9.30 area, 937 area. So I don't mind paying up for the trend that's moving upward. I don't want to pay up right now, where my risk is that if it does break even another 20 cents lower, it means that it could be stuck for quite a while and then start to make lower lows and lower highs. Let it prove its strength. Looking out, if you're longer term oriented, and I think for you, you're looking at this more as a swing to maybe intermediate term. I'm looking at this as a more longer term position, and I would say that I would rather buy it on strength for that leg D in the monthly chart than to risk a $7.55 stock pulling back 12%, maybe, 10, 12, 15%. That makes it much harder to come back. So hold off. Right. I'm keeping it. In fact, what I'm going to do is I'm going to turn the page, and I'm putting it in my book, and I'm putting it right down at the bottom of the page, BFR, and I will look at it maybe by Wednesday or Thursday. So that's the way I'm treating it right now. Now, if you haven't been able to get back to me, and it's trading even today or tomorrow up in the 781 area, then I'm saying nice. Thank goodness, because that was so important, because now the MACD is going to cross positive in the daily, and then I'll say to you, now you can just nibble. I really mean nibble. Get a little starter position, and that one can have a little bit more of a stop and make the stop the low of today, but it's a very small position. It's really a feeler, like a pilot light move. Tell you the truth, I don't think it's going to happen. I would be holding off right now. Hope that helps you.
It does. Thanks a lot, Basil.
Thank you. And keep your eye on this. Don't let it get away from you, but it's just something that right now I think the risk is a little bit too much. So thanks for calling, Dan.
Okay, thank you.
Thank you. So, folks, my impression, let me now give you my market perspective. I did an incredible amount of work over the weekend, and all I did, that work was to say, I'm looking at these stocks. Let me just, in fact, I'll do that right now. We started doing it the other day. Look, here's the IBD list. investors top, let's just go whatever this is the top 50. I'm not even looking at top 50. I'm just looking at whatever we can get to before the next call, or we run out of time. NUS made a peak 1, a peak C1, peak C2 double top. It's trying to rally back. Yes, we've seen that even the QQQs did the C1, C2, and then went right back to make a leg D. It can happen, but there's a certain time limit. The Qs did it perfectly. This is a leg D, and my 120-minute chart of the Qs say this is peak E, and if there's a close at any point in the next day or two below 83.59 is the low, but I'm saying 83.50, there's a real good chance that the Qs are making at least a shorter-term top right now. Let's go to back to what we were looking at, NUS, and we'll look at it in terms of parameters. There's a peak D in the weekly. The MACD is very good, but the stochastic starting to pull back very sharply. There's a big divergence here. Relative strength is poor, but the unbalanced volume in the weekly says, yeah, we're making a top, double top, and I haven't been able to reach a new high in the OBV. It says be a little bit careful, and it's leg E/B, New Skin Enterprises, personal care products, nutrients, supplements, etc., etc. And these are the A shares, and I think the monthly chart is fabulous. I'd like to come back to it. If there's a pullback into it's at 115.21, you give me a pullback into the 109 to 103 area, give it another week or two like that, and then I'd say, hey, maybe the monthly can go higher because the 93% might have pulled back to 91%. But in the meantime, it's getting kind of toppy. Look at Facebook. Facebook FB trading right now at 46.99. Made a peak E-top at 54.83. It did the 2-bar reversal, Chapman wave technique, 2-bar reversal, 54.83 on the 18th of October, 54.81 on the 21st of October, and it's really come down sharply from 54.83 to 46.98 right now. Peak D in the weekly, and fabulous. Leg B, probably a peak D in the monthly. This thing is going to be going higher over a period of months. It needs time to relax and just take it easy and build strength. IWM. The IWM, I'm going to go back to those IBD. There's a double top forming, but the stochastic and MACD are way weaker than they were when it hit 111.62. Doesn't mean to say that it's going to fail. No. That MACD can cross positive, and the stochastic at 75% can go to 80%. But if there's a turn down, the IWM in leg D, peak D, I'm sorry, in the weekly chart, with a lot of very short-term falling axe formations. Even here there's a falling axe formation. That'll be the fifth. 6, 1, 2, 3, 4, 5. That'll be the sixth, and very just this year alone in the weekly chart, right there to right there. I'm looking at this and I'm saying I think it's getting tired. It's leg. Now this is the whole thing. Is it leg E in the monthly chart with an F still to come later on, or is it recycled to a new A that gives you at least another? It can't be less than 8 months before it would make a D. So I have to go with the leg E right now and say it's in E. This month it hasn't made a new high of 111.63. That's the point that it'll extend leg E. I think it's due for at least a little bit of a breather here. Make a cup formation, go from 111, maybe 109-ish, maybe 109 to 108, somewhere around there. 3 to 5% correction. Maybe that's the start, if there is anything at all. Just go to Jazz. Jazz, so you've got JAZZ is a symbol, Jazz Pharmaceuticals, ADS. I'm looking at these stocks. My subscribers know we've looked at these periodically. It just always looked like it was kind of toppy, and then when it looked like it was a great buy, there was a lot of nervousness, at least on everybody's part, at least on my part, down in that October low before it turned around so beautifully. So missed ever getting into it. I think maybe we've had it for a very brief period. Jazz Pharmaceuticals, specialty drugs, therapeutic areas of narcotics, pain, psychiatry. Hey, they're in exactly the right area, especially the psychiatry part of it. No, but seriously, this is a fantastic chart, but it's gone parabolic in leg E. And it's leg, I've got to call this now. I've spent a lot of time on this. I don't think I can call it anything yet, because it can't get an H. And there's no other way to count this from the low that was made in the weekly chart in April of 2013 this year, the week of April the 19th. I've got to call it leg B. I mean, I don't know what to call it. There's no other way I can make it unless It's an unusual. No, I can't even. There's no terminology that I have. So if that's the case, it says it could pull back to the 96 area. The 9-period moving average is at 108.96, and then maybe move on. If that goes higher, that's amazing. I mean, that's vertical. I don't know what you expect from stocks when they do this. So now in the daily, and I have to go time frame by time frame, and the time frame by time frame says it's making a peak D at 110.63. That was on the 14th. It's tried today to rally above. It's gone to 110.57. Let me type that in, 110.63. Will it fail, or will it break out? I just don't know. Did I say 83? I think I said 83. And if that's the case, then there's a pullback, and the pullback could take it, and the big test will be between 104 to 102, and the reason being 103.57 is the 9-period exponential moving average. I don't yet have a sign. I'll get that sign in another couple of days at 63. 110.63. So here it is, number 3 on the list. No sign yet of turning down, but the double top formation, the on-balance volume has turned down. The relative strength is starting to turn down, with the stochastics at 92%. So fund managers will keep gravitating to these stocks the moment there's any strength at all. Look at Save. This is Spirit Airlines. I have to tell you, I was looking at airline tickets last night. Things have changed. Those airlines, they've found the golden rod, whatever it is, because they're making money. Leg D in the monthly chart of Spirit Airlines. Peak D possibly in the weekly. MACD still at 82%. MACD is still good and 82% in the stochastic. It looks a little toppy. And then you got this big rectangle formation. It says that Spirit Airlines Save, trading at 44.24, down 29 cents, could form this rectangle formation, have limited upside just for now. But the main thing is, how does it treat the middle of the wick of the 30th of October? Good news, I guess. If it gets to 40, if it breaks under 41, it'll retest the low of 39. Is that 30? Yeah, 39.36. Meantime, it's in a trading range with a little mini trading range that says resistance at 45.30 and support at 41.41. Okay, looking further along the line, I want you to just quickly go to the VIX, the volatility index. Now, every once in a while, there's a pattern that I focus on, and it repeats. Well, we've looked at the H pattern that often goes to an M pattern in the most recent weeks in many of the weaker indices. Well, there's nothing really here that says there's going to be strength in the volatility index until the doji came. Remember, the moment in an H pattern, especially in M that goes to an H pattern, you break the left side low, and in this case the VIX index on 1234 on the 18th of October. You break that and then close below it, 1234. It closed at 1219 on the 15th on Friday. It means if by the very next session, usually it's the same session, but if on the very next session it doesn't bounce back into the arch, that's very negative. But it has bounced back in the arch. And the 120-minute chart is showing that there are signs of a movement to the upside, and that's very good. We'll be back with Bob from Rumson, New Jersey, looking at the IWM straight after this break. Dow's up 36, S&P is almost unch. I think we might even close down today. Wouldn't that be interesting? Be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi. I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, we're back, and I'm looking at high-grade copper. Wow, it's just not a good pattern in the weekly chart. I can just tell you this, that if it breaks 3 right here, the most important level to watch is 3.1090 in the continuous contract, the low of August the 1st. If it breaks that, then it's going to retest the previous low, which is even lower than that. Let's go to Bob in Rumson. Hi, Bob. How are you?
I'm good, Basil. How are you?
I'm very well, thank you. And you would like to do what?
I'm looking at IWM, and it looks, it is higher today compared to the other averages, but over the last week or two, it seems like it's sort of lost some of its gusto compared to the Dow and the S&P.
Right. And
I'm looking at it as a low-risk short opportunity.
You know, I'm going to make this suggestion because I know you watch this really closely. If I'm correct, the 120-minute chart, now it could recycle, but I think that the 120-minute chart could be making a peak F right now. This is the IWM. So here's my recommendation. Because the risk to reward, if correct, I love when I get signals, as I'm possibly getting today, that are what I call silent signals. There's no news, there's nothing there that's disturbing anything, and yet the market fails at the end of the day. And that's really the clue. If it doesn't fail, but in fact the Dow closes up about 85 points, the S&P actually garners some more strength and closes up 4 to 5 points, then I have to say, recycling, we could go even higher from here.
Really?
But today's the day, and so the risk reward, what would you buy? Would you buy like the TZA or what?
No, well, you could do that. I personally, I would buy a deep in the money option. So I like the deep in the money option, and there's a reason. There's very little premium.
So you would get the put?
Yeah, I'd buy like a December 120 put. You could buy that right now for around $9, and it's in the money by $8.85. So you don't have a lot of premium.
You don't have a lot of premium, and you will go down at a little less percentage, probably in the beginning about 75, 78 cents to the dollar on the way down. So
right.
I think that that's a very good way to do it. In other words, you're really looking at a percentage, minimizing your entry point in costs, maximizing the percentage that you can get, plus trading a trend, a potential trend. I like that because, yeah, and not only that, I would just say to you, look, you could make, I don't know if I'd even put a stop there, but I would say that if it clears 111.62, the high of the 29th of October, decisively, if it goes to 112.20, that's really, that to me, that says that the MACD will cross positive and the stochastic will probably get to 80%. And then I'm going to say to you, uh-oh, this could go a little higher. So that would be the risk.
I like that setup right there. If that was,
yeah,
that would tell you, look, I was wrong.
I was wrong, and you'll get out with a minimal of point, but percentage will be a little bit, but point, it'll be very tiny. It'll be like $1.20 or something. You're out. Most importantly, what will happen is that if it pulls back and today closes under 110.90, and then by Wednesday it's under 110, you're in the money for your particular position. You're not doing as well as if you were buying the 112, but it doesn't matter because you're looking. What would you buy? 120? Yeah, I think that's exactly it. So that you'd be playing it as a trend potential, and then if it garners momentum to the downside, you can handle the trade, and it gives you a lot of time. I like that. Right. I think that works very well. So good luck with that one.
Thank you. I love your show, Basil, and your whole system, the whole setup. Thank you.
Thank you very much. I do appreciate that. Thank you, Bob. Folks, Dow's up 41. S&P's about unchanged. Watch out. If the Dow closes under 15,957-ish, somewhere around there, then we've got a 3 to 5 day pullback coming, I suspect. Thank you for being here. Stay tuned for Larry.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.